Good afternoon, everyone. This is our last topic for the monetary policy and central banking, which is the continuation of instruments of Bangko Sentral action. So today, we will discuss to you the loans to banking and other financial institutions. But before we proceed, let us first define what is a credit policy. I know that this is not new to you anymore because as far as I know, we've been discussing about credit policy in our previous lesson. So I will just add additional information about credit policy. So credit policy is a set of guidelines that set credit and payment terms for customers and establishes a clear course of action for the late payment. A bank credit policy achieves from unwritten set of standard, sometimes very envious to more specific criteria, covering the condition under which loans are made. Where a bank is small, such policies are seldom found writing. A credit policy has the following advantage. It sets out clearly how you are going to get new customers, what information you need, how much credit you are prepared to offer in time and value. It clarifies the work for credit and sales to work together in a positive environment to grow the business. So credit policy is important to the organization as well as to the customer. For the organization, credit policy serves as a foundation to improve productivity and to be successful in the collection of accounts receivables or debts to generate more profit. This also serves as a guide to achieve good customer service by treating all customers equally. It is better to let the customers know what to expect for them to have understanding about your company's structure and terms in extending credit to avoid risks such as late payments. And also, put in mind that when you create a credit policy, make sure that all employees should be familiar with it and that it should be in written form to avoid confusion and misunderstanding. The discount, loan, and advances which the Bangko Sentral is authorized to extend to banking institution shall be influence the volume of credit consistent either the object of price stability. The Bangko Sentral lend out to banks through rediscounting, loans, and advances. The Bangko Sentral lend to the bank through rediscounting to help the banks meet its financial obligation. Rediscounting is the privilege of qualified banks to obtain loans or advances from the Bangko Sentral with a collateral such as promissory notes and other loan papers of its borrowers. Loans refer to a debt provided by a financial institution for a period, while advances are the funds provided by the bank to the business to fulfill working capital requirements which are to payable within 1 year. So loans are a source of long-term financing, typically more than a year, whereas the advances are a source of short-term financing that is to be repaid within less than a year. The Bangko Sentral extends discounts, loans, and advances to banking institutions to influence the volume of credit consistent which object of price stability and maintenance of financial stability. It also grants loans or advances to banking institutions in precarious financial condition or under serious financial pressure subject to certain conditions. Credit operations are granted to the banks as liquidity loans for meeting their financial obligation. There are types of credit operation. First is the normal credit operation. Those that be extended normally and regularly for specified purposes. Normal credit operation are those who have been given an extension in paying their loans. This is usually performed almost every time for a certain purpose. Example is rediscounting. This used by banks by refinancing their clients, giving them extension in paying for the condition that their loans or advances should be used in a purpose.
First purpose of normal credit operation is the commercial credit. So a commercial credit is extended by central bank to companies or individual that needs capital resources to fund new business opportunities. The commercial credit is commonly used to fund the day-to-day operations of a business. Generally, there are two types of commercial credit. First is the secured commercial credit. It is a line of credit that is backed by collateral. So kapag si borrower hindi nakapagbayad, then pwedeng kunin ni lender yung collateral as payment. Liquidate the collateral for cash and yun na yung gagamitin na pambayad sa utang ni borrower. Second is the unsecured commercial credit. It is a line of credit that is not backed by collateral. So this type of credit is riskier for the lender. Usually pag unsecured ang credit or walang collateral na pwedeng kunin as payment, the bank or lenders offers higher interest rate with a lower limit of borrowing in order to limit the risk in case na di makapagbayad si borrower. The BSP may extend commercial credit in the nature of first, export credit. Export credit is a loan extended to finance a specific purchase of goods or services from within the creditor's country. One of the primary purposes of export credit is to support national exporters and enhance international trade. Next is the import credit. It is a credit facility that an importer has with a bank in the country where it resides. So an import credit may work in two ways. First, the bank lends the money directly to the importer. The importer then pays the exporter, and when funds are available, the importer pays back the loan. Or it can be the bank pays the money directly to the exporter, and as the importer receives the goods, the importer then repays the loan. Third is trading and transport loan. It provides funds to help borrowers facilitate home trade and foreign trade. It extends loans to fund transportation infrastructure to open up more opportunities in trading. Warehousing helps merchants and manufacturers in storing their goods in case they do not have their own warehouses or their warehouses have limited capacity. Warehousing is the accumulation and custodianship of bonds or loans that will become securitized through a CDO transaction. CDO means collateralized debt obligation. Kaya siya sinabi na securitized through a CDO transaction kasi warehousing is a way for businesses to borrow money secured by their inventories or the goods stored in the warehouse. So these inventories are used as collateral for loan. Another purpose of normal credit operations is production credits. It provides credits to farmers, ranchers, and rural residents so they could purchase housing, perform marketing activities, purchase farm equipment and livestock, and operate farm-related businesses. So production credit may be extended in the nature of agricultural production. So this is any activity related to farming or the use of cultivated plants to produce products to be sold commercially. So credits are extended to farmers to finance the planting, improvement, and harvesting of agricultural products. Animal production is concerned with animals that are raised for meat, fiber, milk, eggs, or other products. Credits are extended for purchase of livestock and for development of infrastructure required for breeding, management, and caring of farm animals. Third is the mineral production. So this is an activity where mineral resources are converted to marketable commodities. Credits are granted to finance the expenses and capital needed in the production of mineral commodities, which is essential in our countries for maintaining and improving the standard of living. Next is agricultural processing. Credits are granted to manufacturers that processes raw materials and intermediate products derived from the agricultural sectors. Next, industrial processing. Credits are granted to manufacturers to finance manufacturing costs that is used in converting raw materials to finished product. Indirect export. Credits are granted to indirect exporters who may not be exporting their products directly. You can borrow funds to purchase or produce goods that are intended for export or that are sold by exporter to another company that export the product. Lastly, industrial loans. Loans availed by manufacturers and public utility firms to finance the acquisition of new or additional plants and machinery.
So next is other credits. Special credit instruments that otherwise are discountable as commercial and production credit may also eligible for discounting. These instruments, among other things, are in the nature of housing loan, microfinance, service exporter, agricultural loan, and other eligible economic activities. So, first is housing loan. Familiar naman na tayong lahat dito sa loan na to. So, from the word housing, alam na natin kung para saan itong loan na to. So, housing loan is a loan by a bank or other financial institution that a person can use to finance the purchase of a house. So, ito ay grant ng bangko or other financial institution, sabi ko nga, to an individual na gustong bumili ng bahay, magpagawa ng bahay, magpa-renovate ng bahay, o magpa-expand ng bahay. This kind of loan, pag bumili ka ng bahay, pag nag-loan ka, tapos binili mo ng bahay, the property is a mortgage to the lender as a security till the repayment of the loan. So the banks or the financial institution will hold the title till the loan has been paid with the interest due for it. So, for example, nag-loan na, ingatangkot balay, then that loan is good for 35 years. 35 years ko bayadan. So, after 35 years, doon ko lang makiklaim na akin na yung bahay or yung property na yon. Hindi ko siya pwedeng i-claim nang hindi ko pa bayad. You can only claim that property pag fully paid ka na. Housing loan is much better compare pag nagre-renta ka ng bahay. Kasi pag nag-loan ka, bumili ka ng bahay, after the term na nasa agreement, then may mapapasayo in the end. Pag nagrenta ka, kahit ilan pa yung binayad mo na, after ilang years na, walang mapapasayo in the end. So next is microfinance. When we say microfinance, these are loans granted to the poor and low-income household for their micro-enterprise and small businesses so as to enable them to raise their funds or raise their income levels and improve their living standard. So let's proceed to service exporter. When we say service exporters naman, ito yung mga natural person who are resident of the Philippines or juridical person organized and licensed under Philippine laws engaged in rendering technical, professional, and other services abroad paid for in acceptable foreign currency. They are funding the working capital of service exporters who are engaged in rendering technical, professional, and other services. Like for example, you are a professional teacher here in the Philippines and you are a tutor of 17-year-old student in abroad. So, you are using your profession, and with that profession, you can be paid by them with their currency. Another example is that there's one company in the Philippines doing crafts and they tend to send it abroad. So they will pay for that. So let's proceed to agricultural loan. Same with housing loan, familiar na din tayo dito. So agricultural loan is used for agricultural purposes like hog raisings, farming, poultry, purchase of machineries for farming and fishing, and other agricultural endeavors. Other agricultural loans under this category includes fishing boat financing, agricultural infrastructure loans, and farm equipment financing, among others. In short, when agricultural loans is a loan that are related with agriculture. So you can
So, I will continue the discussion on our topic and we're going further about advances. Advances is rather like a credit facility extended to the borrower which fulfill any short-term obligation. It is generally for a short-term duration of time, for instances, a year. The bank will section this as a short-term loan. The said advances will be only facilitated if the borrower meets a specific condition. The advances to banking institution is governed by the provision of the Article 4 Loans to Banking and Other Financial Institutions of the New Central Bank Act of the Philippines. The BSP also grant loans or advances to banking institutions under serious financial pressure subject to certain requirements. They can provide advances for a period of not exceeding 180 days or a total of 6 months provided the following are served to be collaterals. One is gold coins or bullions. BSP accept gold coins as a collateral for loans provided that it is identified by at least 99.5 year and has been transformed into bars, minted into coins. Next is securities representing obligation of the Bangko Sentral. This means that advances is extended to banking institution with the use of securities or any documents showing that the bank is in financial distress. This will serve as a proof in obtaining the credit. Number 3 is credit instruments, to which reference is made under commercial credits. The commercial credits is discussed by Ms. Castro. The BSP extended advances to end-user borrowers who executed credit instruments such as acceptance, promissory note, bill of exchange, checks, and other credit instruments. These are generally negotiable, which means they can be transferred in the same manner as money. Next is utilized portion of advances in current account. Also, BSP can extend advances to institution if it's agreed that the utilized portion of the borrowed amount can be used as a collateral. These are covered by the regular overdraft agreement related to operation included under common credits and production credit. Number 5 states that negotiable treasury bills, bonds, notes, and other negotiable obligation of the government can be used as a collateral. It's 80% of its market value and maturing within 3 years. And last is negotiable bonds issued by the national or local government or its instrumentalities. It is used its 80% current market value, maturing for not more than 10 years from the date it is obtained.
Second types of credit operations is the special credit operations. Special credit operations, those that may be extended for a period of not more than 7 days without any collateral. So these are the loans that can be extended for a maximum of 7 days without requiring any collaterals. Under Section 83, the loans for liquidity purposes, the Bangko Sentral may extend loans and advances to banking institutions for a period of not more than 7 days without any collateral for the purpose of providing liquidity to the banking system in times of need. Maturity of not more than 7 days. For example, imutang ka, then nag-due isunan. Then, the maturity of not more than 7 days, this means that you have a way to pay in not more than 7 days from DJ na ited nga due date DJ utang mo. Kaslang ticket kaslang adda pa wayway na a 7 days after DJ na ited a due date na DJ utang mo. Collateral free. This means metket you don't need your properties or collaterals no umutang ka, parang kumbaga ket free ka nga umutang nga awan iti kasukat na nga properties. The last is the purpose is to provide liquidity to the banking system in times of need. So ang liquidity dito is the available funds to finance the business operations. So ang purpose is upang magbigay ng magagamit na mga pondo ang banking system sa oras ng pangangailangan. The third type of credit operations is the emergency credit operations.
These emergency credit operations are extended only in the period wherein a bank faces an imminent financial panic or emergency. Central banks have been referred to as lender of last resort because the banks will depend and ask the central bank's help to fully carry out their function as a bank, which is to achieve monetary stability, maintain financial stability, and to provide financial support for their own government. From this, we can say that the central bank is the last hope of the other banks in order for them to survive the banking industry. The BSP also extends financial assistance to banking institutions in the form of fully secured emergency loan or advance. When we say emergency loan, the amount borrowed by a banking institution is withdrawn by the firm or used by the firm immediately. When we say emergency advance, the amount borrowed by a banking institution is not withdrawn immediately at one-time transaction, but the banking institution can withdraw or can get what they borrowed just like in installments whenever they needed to. The fully secured emergency loan or advance is used as temporary remedial measure to help solvent banks overcome their liquidity problems arising from emergency or imminent financial panic and or precarious financial conditions or serious financial pressures. The BSP may grant emergency loans or advances in two instances. First is the emergency or imminent financial panic. When we say imminent financial panic or emergency, the value of the assets of the bank drops rapidly and is often triggered by a panic or a run. Next is precarious financial conditions or serious financial pressures. When we say the bank faces precarious financial conditions or serious financial pressure, the bank faces uncertain situation like when the bank's income decreases and coupled with fluctuations in the banking industry. The time period for an emergency loan or advance to be repaid shall not exceed 180 days including renewals. The assistance shall be limited to the amount needed by the bank or applicant bank rather to overcome the emergency or financial predicament but shall not exceed 50% of its deposits and deposit substitute and provided that any emergency advance should be collateralized. Here are the acceptable collaterals accepted by the central bank. First is the government securities. These are the bonds or certificate of indebtedness issued by the government to finance its projects, activities, and programs. Number 2, unencumbered real estate properties. These are the first-class collaterals that is not subject to claims. Number 3, hold out on foreign currency deposits with the Bangko Sentral. Meaning the foreign currency deposits with the Bangko Sentral of the applicant bank is still to be in service or is still in operation. Number 4, mortgage credits with remaining maturities of not more than 360 days. Meaning the applicant bank is still anticipating income from the mortgages offered by the bank within 1 year. And number 5 is the commercial papers. These are unsecured promissory note with a fixed maturity period of rarely 270 days. This is issued by banks to obtain funds to meet their short-term obligations. Next topic under the emergency credit operations is the interest rate. The interest rate is based on the BSP's lending rate plus 2% per annum. If in case the debtor bank did not pay on the agreed date, the bank will pay an additional 5% per annum. This will be treated as liquidated damages. Whenever the bank is delayed in the payment or in the remittance of payment from the mortgages assigned to the bank, the BSP shall impose a penalty of 1/10 or 1% per day of delay. This will be the end of our report for credit policies. Here are our members. Thank you and God bless.